Why waiting for rates to drop can cost you more. Everyone keeps saying the same thing. I'm just going to wait until interest rates drop. On the surface, that sounds like the smart move. Lower rates should mean lower payments, right? But what most buyers don't realize is that waiting for rates to drop can actually cost you more in the long run. My name is Bryan Marota. I'm a real estate agent here in California, and I work with buyers who are trying to make smart decisions in today's market without relying on headlines or fear-based advice. So let's break this down clearly. The big mistake. Most buyers focus on only one number, the interest rate. But the interest rate is just one part of the equation. What really matters is purchase price, competition, negotiation power, and long-term equity. When you focus only on the rate, you can miss what's happening in the market around you. What actually happens when rates drop? When interest rates drop, two things usually happen at the same time. First, more buyers enter the market. Second, competition increases. Buyers who are waiting on the sidelines all jump in together. That leads to multiple offers, higher prices, appraisal gaps, and buyers overpaying just to win a home. So even if your interest rate is lower, the purchase price is often higher, which can cancel out the savings. Lower rate, higher price equals same or worse payment. Here's what many buyers don't expect. A lower interest rate does not always mean a lower monthly payment. If home prices rise because demand increases, your monthly payment can end up the same and or even higher despite the lower rate. And once you overpay for a home, that price is locked in forever. Why today's market can favor buyers. In higher rate markets, the dynamic changes. There are fewer buyers competing. Homes sit on the market longer. Sellers are more open to price reductions, credits, and flexible terms. This gives buyers more control and more room to negotiate. You can't negotiate in a bidding war. You can negotiate when demand is lower. In the strategy many smart buyers use. Instead of waiting for rates to drop, many buyers take a different approach. They focus on buying at today's price, negotiating seller credits or price reductions, locking in the home they want, and refinancing later when rates improve. You can refinance your interest rate in the future. You cannot renegotiate your purchase price after you buy. Who waiting might make sense for waiting is not always wrong. It may make sense if you're not financially ready, you don't have stable income, you're missing emergency savings, or you're planning to move short term, but waiting only because of rates without looking at the full picture can be costly. Final thought. Trying to time the market perfectly almost never works. The buyers who win long term are not the ones who guess interest rates correctly. They're the ones who buy within their budget, negotiate smartly, and think long term. Waiting for rates to drop might feel safe, but in many cases, it can cost you more. If you're unsure whether waiting or buying now makes more sense for your situation, I'm happy to help you run real numbers and build a clear plan. You can call or text me at 562-484-8138 or message me on Instagram at Bryan_Marota. Even if you're 6 to 12 months out, having a strategy now puts you ahead.